The missiles flew, the oil spiked, and the hard money went up anyway. Sit with that a moment, Warband, because it is the entire briefing in a single sentence. This is Tuesday, July 21st, 2026. Here is what moved while you slept. Start with the anchor. As of 5:30 Eastern, Bitcoin trades at 66,200, up about 3% on the day, and back above the 65,700 line that stood over it as a ceiling all last week. Our read of the InvestAnswers Decision Support System has Bitcoin's optimized trend market green again this morning, one day after it rolled red at dawn. Now mark where that green sits, because that is the whole story. On our board right now, Bitcoin is the only bullish anchor standing. The broad market, red. The Nasdaq, red. The long bond, red. Gold, no green trend at all. One asset out front and the entire rest of the tape behind it. The engine does not call that a rally. It calls it a decouple, and it is pointed up. And at Monday's bell, a second signal fired. Not one name, but a family. Between 4 o'clock and 4:15 Monday afternoon, Eastern, 15 separate names tripped mean reversion oversold inside a single 15-minute window. Nearly every one of them builds the same thing, the power and the grid. Vistra, Eaton, Quanta Services, Bloom Energy, General Electric, the hardware that fills the buildings, Vertiv, Corning, Cisco, the silicon itself, Intel, ARM, Teradyne, Entegris. That is not 15 stories. That is one story, told 15 times. Into today's open, Tesla closed last night at 370 and Nvidia at 203. Now understand what the coin walked through, because the timing is the entire argument. It did not break out on a calm tape, it broke out on a war tape. The Iran conflict escalated again over the weekend. Fresh American airstrikes, Iranian strikes on our installations in Kuwait, Bahrain, and Jordan. 3 American service members dead. Brent crude punched above $90 Monday. Yields stayed high, the Dow fell, and the desks trimmed their bets on rate cuts. Every one of those is a classic run-to-safety trigger, so watch where the safety money actually went. Not to gold. Gold is pinned near 4,000 and cannot muster a green trend of its own. Not to the long bond, red. It went to the scarce coin, and underneath the price, the plumbing agrees. Better than 25,000 coins walked off the exchanges in a single 24-hour window, the fastest drain in 6 months. Whales took on roughly 270,000 coins over the trailing month. Exchange reserves now sit at a 7-year low, and the spot funds have booked a second straight week of net inflows, 75 million after 197 million the week prior, which snaps the outflow streak that defined the first half of this year. Be honest about the size of it. Those inflows are small, and the year is still 5.2 billion in the red. The coin is up about 11% on the month, and still trades near half its all-time high of 126,000. This is an inflection, not a flood. But InvestAnswers put their name on the read yesterday and called it the end of the bear. And here is what the Warband should take from it. For years, the knock was that this coin was just a risky tech stock in costume, that when the missiles flew, it would sell off with everything else. This week, the missiles flew, the oil spiked, and it went the other way. Hard money trends green. It is not only the coin. Ethereum trades at 1940 this morning, up 4%, and Jordi Visser of 22. Fee Research pivoted to it yesterday, noting it has run nearly 20% since July began, outrunning Bitcoin, and calling a close above its 200-day line the start of something new. That is his call, not our conversion. Our conviction on the second layer is unchanged, but his reasoning is one we have been circling for weeks. Artificial intelligence agents, he says, need food, and that food is tokens. Agents that transact need rails that settle without a bank's permission. Back to that 15-name flush, because it is a gift and most men will read it as a warning. Every one of those names is the physical floor under the artificial intelligence age. The megawatts, the switchgear, the cooling, the optics, the wafers. Monday they were sold together, and they were not sold because demand cracked. They were sold because a barrel of oil went to 90, and the machines that price risk do not distinguish between an energy shock and an energy business. That is a category error, and it has a tail. Vistra fired mean reversion oversold and optimized trend bullish in the very same minute, washed out on the day, still climbing on the trend. That is not a top rolling over. That is a crowded trade taking a blow to the ribs and staying on its feet. And overnight, the tape started to admit it. Oil eased back toward 81 on reports of mediation, and Asian equities rose for the first time in 4 sessions, led by the chip makers. Here is the second-order truth. The reason this layer now trades on geopolitics is precisely because it is physical. A model weight can be copied 1,000,000 times for nothing. A gigawatt cannot be emailed around a closed strait. The market keeps pricing the intelligence and the iron as one trade, and they are not one trade. One of them is getting cheaper every quarter, and the other one is the scarcest thing in industry. Nvidia sits 14% of its high fighting to hold 200, and yesterday Advanced Micro Devices unveiled a rack-scale system aimed straight at it, shipping to Microsoft, Meta, and Oracle this year. The competition is real. The megawatt shortage is not negotiable. One more and it lands hard into tomorrow. Tesla reports after the close tomorrow evening. Hold to what is actually on the record. 480,126 vehicles delivered in the second quarter, up 25% year-on-year, past every estimate on the street. Robo-taxi service live in Miami since the 3rd of July, the first market outside Texas and California running unsupervised. What is not on the record is the size of that fleet. Tesla has not disclosed it, and I will not hand you a number the company has never given. The counts circulating this week come from hobbyists flying cameras over the Texas Gigafactory. Color, and nothing heavier than color. So set the print up on what the tape will actually judge. Our engine has Tesla trend red and stretched to overbought walking into it. Remember what happened the last time this company handed the street a record. It delivered its best quarter ever and the stock fell 7.5% the same day. At a multiple nearing 200 times forward earnings, a good headline is not a catalyst. Tomorrow, the questions that carry the stock are margin, energy, and what management will commit to on autonomy, not the number at the top of the release. So, carry this into the day, Warband. The coin broke its wall on the worst possible news and held. Defend that ground. Above 65,500, the breakout stays honest, and 62,500 is the 200-week floor beneath it. The physical layer of this build-out was thrown out with the war headlines and the trend never broke, and the calendar comes fast now. Tesla reports tomorrow after the close. Starship flies Thursday at 6:45 Eastern from a rebuilt pad with the first 20 version 3 Starlinks aboard, and the Federal Reserve meets next week. Let the crowd trade the headlines. We trade the scarcity underneath them. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Hold the line. Skål.